Video is on IRS Form 673, the statement for claiming an exemption from withholding on foreign earned income eligible for the exclusions provided by Section 911. So, Section 911 of the Internal Revenue Code specifically discusses citizens or U.S. residents living abroad. So, we're talking people that are still U.S. citizens or they are U.S. residents that live overseas either for the entire tax year or for the vast majority of it. So, under this circumstance, if you're going to qualify for a foreign earned income exclusion, specifically housing exclusion, then you would complete Form 673 to give your employer instructions that they don't need to withhold tax for federal income tax purposes on income that you reasonably believe will be exempted. So most employees will have filed IRS Form W-4 with their employer, and this gives basic withholding guidance based on the taxpayer's situation. So basically, filing status, tax credits, and deductions that the taxpayer believes that they may be eligible for. This is a little bit more specific to foreign earned income. So this isn't the same form as you would see IRS Form 2555. That is the foreign earned income form, and that is what you file with your income tax return. Form 673 is the statement that you give to your employer after you've outlined what your reasonable housing costs are so that they can adjust your tax withholdings accordingly. So this is a one-page tax form that has three parts. Part one is the qualification information for the foreign earned income exclusion, and you either have to satisfy the bona fide residence test or the physical presence test. We'll get into that a little bit more in depth in a moment. Part two is your estimated housing cost for the foreign housing exclusion. And then part three is the certification, which basically consists of your dated signature at the bottom. So we'll go over that because there is some key information that you should probably know. Also on this form, if you pulled it down from the IRS website, you would see some, we'll call it taxpayer instructions, but the content is relatively thin. So we'll go over some of the key points. If you are a service member in the U.S. Armed Forces, for tax years beginning after 2017, there are new rules in place regarding the tax home test that may apply to your situation. You would see more information in the Form 2555 instructions. So as I mentioned, you would, after you complete this form, you would give IRS Form 673 to your employer, and then that will allow them to properly calculate and withhold or adjust their tax withholdings for your tax situation. Now, in the form instructions, your employer will continue their tax withholding for wages that they believe will qualify for an exclusion. However, if they disagree with your assessment on Form 673, your employer does not need to pay attention to those instructions. Specifically, the form instructions state that if for some reason you believe they will not qualify for the exclusion, then you should disregard this tax form. Possibly, I don't know exactly, but possibly a reason might be if you believe that you're going to be eligible based on your overseas assignment for the entire year, but your employer believes that you will be recalled back to the United States, or that you will have your appointment at that location terminated, then they may disregard your instructions. But under normal circumstances, most taxpayers probably are on the same page with their employer, so to speak. So if the taxpayer is under the impression that they're going to qualify for the foreign earned income exclusion, then the employer should probably make those adjustments to their tax withholding. So we'll go through each part of this form, and we'll kind of tie it together in how some of this information you would get from Form 2555, and we'll show you exactly where. So let's go ahead and begin with Part 1. So at the very top, you're going to enter your name, so John Doe and his Social Security number. And then at the top of Part 1, you would enter either the calendar year, or if you use a different tax year, then you would use, let's just imagine that you're using a fiscal year. So that would be so you don't need to enter dates in both of these areas. That was just for illustrative purposes. So you do one or the other, but not both. Now, you're going to check the applicable box based on how you think you will meet the criteria. So the bona fide residence test has specific criteria, as well as the physical presence test. Let's go ahead and talk a little bit about the bona fide residence test. So according to the IRS, taxpayers will meet the bona fide residence test if you are a bona fide resident of a foreign country or countries for an uninterrupted period that includes an entire tax year. So if you were to claim this for 2023, even though we're now in 2024, you would actually have to go back and say, let's just make these adjustments for this, right? So you're kind of projecting this forward. We're saying that we expect to be under the test for the entire year. So if you're a calendar year taxpayer, that would be from January 1st to December 31st. I provided an example right here of a fiscal year that would be a different type of tax year. But according to the IRS, a fiscal year can be any year that consists of 12 consecutive months and that end at the end of the month other than December. If your tax year ends in December, then you're a calendar year taxpayer. So during your bona fide residence, you can leave the country for temporary trips. You can go back to the United States. You can go anywhere as long as you have a clear intention to return to your foreign residence, or you're going to establish a new bona fide residence without unreasonable delay. So you will once you qualify, you will remain qualified, starting with the date that you began the residency and then ending with the date that you leave the foreign residence. So there are situations where you could qualify as a bona fide resident for an entire tax year and then parts of one or two other tax years in addition to that complete tax year. So you can only use this test if you're a U.S. citizen or a U.S. resident within the meaning of Internal Revenue Code Section 7701B1A, which basically states that you're a citizen or a national of a country that has a tax treaty, an income tax treaty with the United States. So you don't automatically qualify simply by living overseas for a year. You actually have to meet certain criteria. So you have to be a resident or a citizen. If you're a resident, you have to be a resident who is a national or a citizen of a country where the U.S. has a tax treaty. Then you have to have clear intentions about maintaining your residence. So if you knew that you were leaving, you could put your date of departure here. So the date within the tax year could be, let's see, basically you understand that your assignment overseas ends on the last day of June. And again, this is for your employer. This is to say, all right, employer, June 30th is when I expect my tax benefit to expire. So please, readjust my tax withholdings after that date. So the criteria for the physical presence test is a little bit more clear. You either do or do not meet the physical presence test by being in that country for a 330-day full day period. So in this case, John Doe was claiming residence of bona fide residence in France. In this one, he is a citizen of the United States, but he expects to be present in France for at least 330 full days out of a 12-month period. Again, that 12-month period could be a calendar year tax year, or it could be a fiscal year. So, this would be the same information, that you would see up here. So you could select either or. You don't have to select both. So 330 full days. There is some specific guidance from the IRS on this. So you can count days that you spend abroad for any reason as long as your tax home is in a foreign country. You don't meet the physical presence test if you're not present in a foreign country for at least 330 full days. Full day consists of 24 consecutive hours beginning at and ending at midnight, and you must spend the entire full day in a foreign countries for that day to be counted. When you leave the United States to go to a foreign country, or when you return from that foreign country, the time you spend over international waters does not count. And the IRS example specifically states you leave the United States for France by air on June 10th. You arrive in France at 9 a.m. on June 11th. Your first full day in France is June 12th. So even though you weren't in the United States on June 11th, you landed in France, you did not spend a full day. So if you landed in France at, say, 11 o'clock on June 10th, then you would be able to consider June 11th the full day. But even if you land at 9 in the morning, that does not count. So assuming that you meet one or both of the criteria, you'll only need to select one. You complete your country name and then the information about the tax year. So up here in the bona fide test, you can leave this blank. If you leave this blank, this basically means just keep letting it go until I say stop. And again, this is for your employer's benefit. This is not information that gets reported to the IRS. So in part 2, you're simply going to enter your estimated housing cost amount. So you should be able to pull this from your prior year records. If you don't have any prior year records, then this is relatively straightforward information. I've tried to extrapolate it out over a 12-month timeline, but again, your mileage may vary based on your locality. So in line 1, rent. So in this case, John Doe's rent is $5,000 a month, so $60,000 for the entire year. Utilities, this would be other than telephone, so electricity, water, sewage, trash, things of that nature. If it wasn't built into your rent, you can just add that as utilities. Real and personal property insurance. So if you're used to homeowners coverage, home insurance coverage, it actually has real property coverage and personal property. So the same thing with if you're a renter, right? So you would have some sort of coverage based on the terms of your lease, possibly, like just in case there's damage that's attributable to your fault. And then personal property would be stuff to cover your furniture, your clothing, your valuables, whatever you're living overseas with, that's what you would have. An occupancy tax that's not otherwise deductible, if that is part of your estimated housing costs, you can put that in here. You can also put any non-refundable fees paid as part of your lease. So I imagine this would not be the same as a security deposit that's refundable. But if you're paying a non-refundable security fee, then that would be something that you can add here. And then household repairs. So expected repairs, out-of-pocket costs, things of that nature. So once you get those items into line 6, you're lines 1 through 6, you're going to add all of them together. And in this case, we arrive at $74,200. Now line 8 is the estimated. So if line 7 is your estimated qualified housing expenses, now you have an estimated base housing amount for your qualifying period. Now, in the form instructions, it refers to IRS Publication 54. If you go to IRS Publication 54, it specifically states that the base housing amount happens to be line 32 of IRS Form 2555. So we haven't pre-filled all of this, so let's go to line 32 and make sure we understand what this says. So line 32 is this amount right here. This is the base housing amount, and this is a 2023 tax form, so we'll update our article with the correct numbers. So if you were to use a daily amount based on the number of actual days, then you would have to take the number of days, multiply that amount by your daily rate. So for 2023, that was $52.60. I'll put a note in the comments section with the 2024 information. If you plan to be there the entire tax year, then you'll enter $19,200, and that is what you see right here. So the $19,200 represents that daily rate over the entire year. So you subtract this base housing amount from line 7, and this $55,000 is your estimated housing cost amount. This is the amount that you're expecting your employer to, acknowledge that you're excluding from taxable income. So you're telling your employer you don't need to pay taxes on this because you'll just get a big refund if they withhold taxes on this amount. So the form instructions don't really prescribe a lot of guidance to employers on how they do this. They just state that they do have the flexibility to withhold or to not withhold based on whether or not they agree with their taxpayer's assessment, their employee's assessment. So we come to part 3, the certification. There are a couple of things that you need to know. One, this is basically sworn oath under penalties of perjury. So this is kind of the catch-all that the IRS uses in case they find something fairly egregious down the line. They can go back to this signed form and hold you accountable if you exaggerated or misrepresented information on this. So what you're certifying is that your total housing cost amount that you entered up here, plus the amount that you might have given to any other employer, is not going to be more than your actual estimated housing cost amount. So if you happen to be overseas working for 2 employers and you give them the exact same form, now you're basically saying you're entitled to twice the housing cost allowance or exclusion, and that's not correct. So you can't do that. And then it also states if you become disqualified for the exclusions, namely you fail to qualify for either the physical presence test or the bona fide residence test, then you'll immediately notify your employer and then advise them as to which period you still remain qualified. So that should be fairly straightforward. Once you certify that, then you can sign and date Part 3 that basically says this is how much you should account for. Please leave that in my income because I'm not going to pay taxes to it. So, and then you give your completed Form 673 to your employer, and then what I would advise that you don't see in this form is to just double check your withholdings after your first couple of pay periods, just to make sure that you're withholding enough. And you may, if you work with a financial planner, you may even discuss the possibility of doing tax planning mid-year just to make sure that you're on point. The only thing that's probably more disappointing to most taxpayers than getting a massive refund would be to find out that you owe a massive tax bill. So, the first year that you do this, you should probably just test your tax situation mid-year just to make sure that you're on track. So we do cover a lot of this information in a little bit more detail in our article. Specifically, we do go over some of these costs. We do go a little bit more into depth in the bona fide residence test and the physical presence test. So if you need to bone up on that, please check out our article, which you can find on our website. Go to teachmepersonalfinance.com, type in IRS Form 673, and you'll see our article appear. You can also hit the link in the show notes. We'll put links in the show notes to this article as well as some of the articles on some of the other tax forms that we either mentioned or are relevant to this video or the article. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's a topic that you'd like to see discussed in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.